While cars are typically seen as depreciating assets and major expenses, intelligent financial choices regarding vehicle ownership can significantly cut costs. The savings generated can then be invested, fast tracking your path to financial independence. In a future episode, we'll discuss how a car can be leveraged to generate new income streams. In this episode of 9 to 5, we're going to explore the crazy world of auto financing, some practical tips to help guide your car purchasing, and a variety of stories, both wins and losses, in our own car ownership journeys. This is the first episode in a multi part series regarding cars and fire. We promise we will not talk about cars all the time here, but it is a topic that is near and dear to my heart. So, as always, I'm Josh, and with me is my co host, Elliot. How's it going, Elliot?
Pretty good. How about you, Josh?
Man, I am so glad that it is October, finally, and we're going to see some cooler weather here. I know this episode probably won't come out until November, but we're finally experiencing some cooler weather, and I'm glad to have September behind me because I had a lot of traveling and I had that tenant turnover situation that I think I talked about in a previous episode. So things are looking up, a lot less busy, and looking forward to spending more time on the podcast here.
Yeah, absolutely. I mean, it's super nice to have some cooler weather. Fall's my favorite time of the year. So, in our house, it's already starting the Halloween season. So, kids are already excited about their Halloween costumes and what they're going to be, and all things fall. Having a great time over here.
Cool. Have they made a final choice on Halloween costume yet?
So, I think that Haley is going to be the lead from. Are you familiar with the show on Netflix, K-pop Demon Hunters?
I am not.
Shocker, shocker, Josh. Yes, there is. It follows like a Korean pop band, and so the lead singer is a woman with purple braid down her back, and leads this band. So Haley is pretty excited to be her. I believe that my son Jordan wants to be Sonic the Hedgehog, so I think that's what his plan is. And I think the last I heard about Connor is he was wanting to do something with monster trucks. So we'll see.
Those all sound really interesting. Now, I do know Sonic, so that'll be really cool. It'd be interesting to see how he will, or you guys will transform that costume because it's more of a, as a hedgehog, he's more of a ball shape. So you could have some fun with that.
Yeah. Yeah, I think I saw in the Amazon history last night that maybe we just bought a prefab costume off of Amazon. So
Very cool. Very cool.
take some of the creative element out of it.
Yep.
But yes, he likes to. He'll be running around the house, I'm sure, as Sonic.
Very cool. Well, to kick things off with the car topic, I pulled up a couple of stats that I thought were kind of interesting and wanted to share maybe a little bit of interesting news. So, as of middle of 2025, according to NerdWallet, the average monthly new car payment is $749. And I should have looked to see what the average length of the car loan is, but I think it's approaching 6 years at this point. At last I heard it was about 5.5 years on average. And then for used cars, it's $529, which is the 749 I don't think is shocking to me as the 529 for used cars because that's on an average basis and average used car finance cost. Again, I think that's still in the 5.5 year range. So what do you think of those numbers, Elliot? Those are just mind-boggling to me.
I would agree that they seem pretty mind-boggling as well. Is just like you said, 749. Yeah, that's believable with the cost of just cars in general for new cars, it being an average. But 529 sounded really, really high to me for a used car price as an average.
Yeah, and I watch a lot of car videos on YouTube, so I get served those. I don't know if you've ever seen them, but there's a lot of shorts out there where a guy will walk around with basically with his cell phone, and he will go up to people and say, "Hey, what kind of car are you driving, and what's your monthly payment?" And it's rare, and I'm sure he's posting the high ones just for the shock factor, but most of these new car prices, people are paying $1,200, $1,300 a month for. And sometimes they're high end cars, but other times they're not. They're like an SUV, like a mid-sized SUV. I don't know why these people are paying that amount, and perhaps it's an issue with their credit history. Perhaps it's a short-term loan. Maybe they're only paying for 3 months or something, or 3 years rather. But I stumbled across another video that I thought was interesting by the YouTube channel Donut, and they're all about cars. They did a video recently where they looked at the comparison of a 1967 Ford F-250 compared to a 2026 Ford F-250. So the 1967 cost $2,500 brand new, which adjusted for inflation would be $24,000 today. By comparison, a 2026 Ford F-250 has a current MSRP of $102,000.
That's absolutely insane. I mean, the same thing like you said as far as the SUVs and things like that is that's just like the price of what new vehicles are becoming is, the 70,000, 80,000, 100,000, and that's now granted F-250 is a big truck, but an F-150 it, correct me if I'm wrong, I believe is the most popular car or truck in the United States. And I'm willing to bet that the MSRP on that still is in the 70s. And that's without any real bells and whistles that go along with it.
Yeah, I think you're right with the Ford F-150 being the top one of the top, if not the top automobile in the US. Yeah, you looked up the MSRP on that one. What's that come back at?
Yeah, $79,005.
Wow. Yeah, it's in that video that I watched, they were talking about the bells and whistles and how the car dealerships are really tricky at being able to say, hey, you can get this really cool option that's only going to cost you an extra $5 or $10 a month. I'm sure that's been going on forever, but nowadays with infotainment centers and all the different camera options and things that you can get on especially these like new trucks, and how this one in particular could back itself up to your hitch. If you were hauling a boat or a trailer or whatever, it could actually back itself up precisely to be underneath the to put the ball underneath the hitch, so you didn't have to worry about doing all that and having a second person. I was also looking at what it would cost from a monthly payment perspective on that vehicle. So $102,000 if you assumed zero down payment, which would be a mistake. But I have to believe, I don't know what the statistics are on this, but a lot of people probably aren't putting down a whole lot of money. Maybe they have a trade of some sort, but at a 6% interest rate, which isn't really too far off nowadays, and that's with fairly decent credit, you're looking at, in a lot of cases, a 96-month loan on a vehicle like this, which is 8 years, and your payment would still be over $1,300 a month, which is just
I
insane.
mean, yeah, just absolutely insane. Like floors me the fact that it's an 8-year loan and that price. I mean, $1,300 is nearly my mortgage. Now, granted, we live in a low cost of living area, but even like I'm on a 15-year loan, and that's within a couple of $100 of my mortgage payment. So yeah, absolutely crazy.
It is. And I remember back whenever I was a kid, I don't know what year this would have been or how young I was. It was probably before I was old enough to drive. So this would have been in the 80s or early 90s. And I remember hearing that the supercars like a Lamborghini or Ferrari, their price tags were right around $100,000 or over. And it just seemed like such a huge number. It was like, wow, this is only multimillionaires are able to afford a car like that. To see something like that, I remember seeing my very first, it was an F-150 actually, but it was all decked out with some kind of suspension on it. It was like some special edition truck on a lot a few years ago, and it had the MSRP of right around $100,000, and I just couldn't believe it. I was sticker shock. I'd walked up to it and thought, wow, this is probably going to be a truck, and it was over $100,000. I just couldn't believe it.
Yeah, no, absolutely insane.
So before we get into too much more, I thought this would be a good spot. We don't really normally do this, Elliot, but I think it's probably a good idea to do. We should ask for a call to action here. So For those of you that are listening or watching us on YouTube, if you enjoy the show, please give us a thumbs up on YouTube or a 5-star review on Spotify or your podcast player of choice, and share us with your friends. We love to get your feedback, good or bad. Feel free to leave that wherever you're listening or watching, or you can send us an email. And Elliot, I'm going to put you on the spot here. What's our email address?
It's Elliot at 9to5pod.com or Josh at 9to5pod.com.
Good job. So we appreciate it. And now, just to get into the topic, I thought I would start with not burying the lead here. So the topic, I think if we stick with our title here, it is that how cars helped me or us achieve financial independence and early retirement. So in my case, I haven't had a car payment in the last 13 or 14 years. I'll get into maybe a little bit of that as we go through here, but for the most part, I have paid cash for all of my car purchases since I really discovered financial independence back in 2012. How about you, Elliot?
I would say, with an asterisk, that's virtually true for me as well. I'm trying to think how far back it was since I've had a car payment. I will say, when I bought my most recent car, basically I had a car payment for maybe 2 months before I was basically using it like a bridge loan until I got my bonus payment from work, and I paid it in full. So I was like, whatever. If the bank's going to give me money to get over that hump, and there was actually time sensitivity too to when I bought the car, because it's an EV and there were federal tax incentives for receiving delivery by end of year at the time. So my bonus payout was in February, and so to receive the $7,500 tax credit, I had to receive the car by December. But prior to that, I mean, our other family car is Honda Odyssey. We paid cash for that. Prior to that, we've had numerous used cars. I will say, we bought one other car really since the time that Dawn and I have been together. At one point in time, we bought I think it was a Hyundai Santa Fe, smaller SUV. It was something that Dawn wanted, and this is probably jumping the gun a little bit, because I'm sure we'll come up to it throughout the episode, but was kind of a we had remorse about our purchase. Is We bought it, not that the car was bad or anything like that, but for the car payment that came along with it, we were like, like, honestly, we don't really see the value prop, and so we ended up selling it in pretty short order.
Yeah. And so it sounds like with your most recent purchase, you were definitely very intentional and you had a pretty good strategy there for paying it off. Even though you had that car loan for a brief period of time, you knew that it was short term and it was by design. And I've used a very similar strategy. I think my car purchasing history would be sort of a bell shaped curve where on the left end of the graph, left side of the graph, I started out with a gift from my parents as a 16 or 17-year-old as my first car. And then my next couple were purchased with cash, so very low cost and no financing. And then I remember not even really being aware of what financing was. And I'll tell a really brief story here that whenever I was, and we talked about it in my origin story, growing up, I wasn't taught a lot about personal finances. So I remember going and looking around used car lots whenever with some of my friends when I was like 16 or 17 years old. And I wanted to get a Camaro. And I went to a one lot and they said there was a sign that said something about ask us about our financing. I went in and asked the guy, I'm like, hey, what is financing? I looking back at it now, like,
Found his mark immediately.
well,
Yeah.
no, in fact, he actually, I think he looked up just for a second and saw that, it was a group of 3 or 4, like 16-year-olds. And he goes, you go talk to that guy over there. And I guess it was the finance guy, but this was a small, like, roadside mom and pop used car dealership. And I don't even remember what I did next, if I went and talked to the guy or what, but it was like, just to reflect on that, I didn't even know what finance. I had a general idea that it was like you you made payments over time, but I had no idea what that looked like in practice or terms or any of that stuff. So needless to say, I didn't get a car that day, but and then in my late teens and early 20s, all of my cars were started to become purchased with financing. After I graduated high school, I begged my mom to help me trade in my used truck on a pre-owned Saturn. If you remember those aren't even around anymore. But it was a four-door Saturn. I thought, hey, I want something that's going to be reliable and fuel efficient and all of those things. And I ended up wrecking that car 13 days after I purchased it at 18 years old.
Oh, that's brutal.
It was awful. It was totaled. And my mom helping me jump through all the hoops of figuring out how to, of course, it had insurance on it, but it had the loan. And then, I mean, the moment you drive them off the lot, regardless if they're new or pre-owned, there's going to be a change in whatever the price was. There's going to be some form of depreciation. So we had to come up with, or I had to pay for that, whatever that gap was, which I don't think was very much, but it was frustrating. And then I was back to buying a car with cash, and the next couple were with cash. And then I guess I had two car loans a couple of different times throughout my early 20s. So when I got married at 23, and I remember I had a car loan and my ex-wife had a car loan, so we were paying multiple car loans, and just thought that's really, what life was all about. You just go into debt and you figure out how to pay for it later. So that happened a couple times until I got into my early 30s and had the FI awakening. But that was after Lori and I had gotten together, and we had one, I'll say, reliable car at the time, where we came into the relationship with our own separate cars, and neither of them were big enough to accommodate the us and our four kids, so the six of us all at one time. When we would go anywhere, we would actually take two cars for a while because not all four kids could fit in either vehicle. And so we went with without any intention and without any prior planning. We went to a car dealership one day together in her car, which was the older Chevy Cavalier, and they saw us coming a mile away. We started talking. I mean, we probably opened up way too much to them and said, hey, we need a big car and blah, blah, blah. We ended up walking away with a Dodge Durango at the time. This would have been 2008. I don't know if you remember what gas prices were like back then, but we weren't making very much money, and gas prices were approximately 3.50 to $4 a gallon. We bought the least fuel efficient vehicle that we could find and financed it for 5 years. I wasn't able to have a car loan because I had just started the bankruptcy. Lori didn't have very good credit. She ended up being the main, or she was the only person on the loan. And it was a 5 year loan at about 12% interest, which had a payment of $450 at the time. And that was just for the payment. Of course, you had higher insurance because we had full coverage, and then we were driving this gas guzzler around, which I remember at some points way back then, nearly 20 years ago, it cost us nearly $100 to fill up the giant tank. So
Yeah.
we, in addition to having that one car, we always, I think I talked about it again in my origin story, that we had a series of very cheap, inexpensive, somewhat unreliable vehicles that we bought for cash for like three, four, $500, and just drove them as long as we could, and then rinsed and repeat.
Yeah. No, I would say that my story is somewhat similar to yours. In your bell curve analogy is, I was fortunate enough to kind of have my first vehicle be, I mean, it was never officially my vehicle. It was just my parents' vehicle that I drove. So I had my first one was a 1988 Saab that I think I talked about in previous episodes, but they had bought brand new in 1988 and had asked the dealer, how long do you expect this to last? And he said, oh, probably like 16, 17 years. And that worked real well for having a son that was just born in 1987. So sure enough, I mean, the car lasted me, I think it was through my freshman year of college, is actually when I went off to college. The car stayed at home with my parents, and the transmission finally died when I was at my freshman year school. So, 18 years, lived a good life. But yeah, then it was kind of a series of used cars that once again my parents really had purchased really through my, I would say, my college years. Is I, you know call it a fi hack or just being cheap or whatever, I rode, like, I carpooled with friends back to school. I only went to college like an hour and a half away. And so most of the time, if I'd go to and from home, I would just ride with somebody. So my buddy Josh, my buddy Dan, I'd I'd just show up at their place and then we would ride out together. And it was nice because we could split gas and stuff like that. But the first car that I bought myself was a it was an Acura TL. So I remember that car. My Actually, somebody that my uncle Bill kind of buys and sells cars as a little side hustle of his own. And so he had this Acura TL. My dad had just kind of let me know that he had it and knew that I didn't have a car. This would have been 2007 or 2008, and I was working probably like a mile away from my parents' house, but I was working for Anheuser-Busch, and so it was I had a good steady income coming in, and I had saved up money from previous work experience, so bought that car in cash and didn't have any financing. And then I kind of eventually got to that point. That car actually got totaled. I talked about that a little bit in my origin story. But then instead of doing the smart thing, I turned around and bought. Are you familiar with the Volkswagen Phaeton?
I am not.
Yeah. So it's not very common in the States. It came in two engine sizes. It came in a W, well, it was a W12 and a V8. And so I had the tiny V8 model, but this was like a, 4,000 pound car. The I think the more common version than that you might see is like an Audi A8. I mean, it's like looks like a Volkswagen Passat, which is like their sedan, four-door sedan, and the Phaeton just looks like you take that and you just kind of stretch it out and put in a big old motor in it. And so it's funny that you bring up the financing because you can see through the history, I haven't really had to buy a car except for that car that I bought in cash. And so I'm sure when I walked into the dealership, I was in my young 20s and saw me as an immediate mark was, I think I tried driving all kinds of very irresponsible purchases for a young 20-year-old or somebody in their 20s. So the Phaeton, I remembered. What model car is the Dodge, like, Hellcat?
Like a super sedan or something like that.
Regardless, I had tried driving like three or probably three different cars that each one was probably more insidious than the last one. But regardless, I walked out with this Volkswagen Phaeton, and I want to say the interest was something like greater than 20% interest on
Wow.
a car. I mean, it was like absolutely insane. Now I ended up paying it off very quickly, but I think, even when I bought it, I wasn't paying any attention to it, and I'm sure the guy at the dealership just saw some kid that we can pawn this car off on.
Man, that is brutal. And so it's interesting that so 2 points come to mind as you talk through your journey there. One, I think there is a little bit of a car guy buried within inside you, and you thought maybe you wouldn't have as much to add to this conversation, but you do. And then second, I think that it's interesting to hear how our journeys were so different around 2007, 2008, where you were buying this car in cash. That was pretty fuel efficient. and that you were living very close to work while we bought this gas guzzler around the same time that we were financing. And I think Lori was driving it most of the time, and she worked like 25 miles from home, and I had to drive it occasionally depending on what the pickup schedule looked like for the kids. And I had a 40-mile one-way commute. And yeah, it was just bad decisions about cars back then, and not a great decision about where we lived in the relation to our employers, which we figured a lot of that out as the years went on. And we're not here to necessarily talk about that piece of it, but it is an important part to remember whenever you are shopping for a car and you have a long commute. You shouldn't buy the biggest gas guzzler that you can.
That's right. No, in hindsight, I mean, I was living with my parents at the time, so I can't claim that I made this super intentional choice that I was like a mile away from the office by any means. But yeah, I would say at least as time did progress, that was always something, on my mind was how far am I going to have to drive to work? And actually, ironically enough, the largest commute that I've ever had to work is my job right now. So maybe I've learned, maybe I've regressed in my years. So
Well, getting back to, I guess, my journey just for a moment, I was going to mention that similar to your current or your recent car purchase, my last three car purchases have been with a similar strategy where I said, I haven't had a car payment, but I did make strategic and very intentional decisions where I would had a loan for a very short period of time. Most of the time, it was less than a year where I said, okay, we're going to buy this vehicle and then we're just going to pay it off very quickly. And we probably had the cash that we would have been able to do it. We just didn't want to deplete all of our cash reserves all at one time. And the most recent purchase that we made was my wife's car, where we went into the dealership. And I mean, things change all the time in the auto industry and the finance industry, where I wasn't sure if there was any that I could get somewhat of a discount if I paid in cash. That used to be the thing, but they kind of looked at me funny and they're like, no, that that used to be maybe like 20 years ago, 30 years ago, you could get a discount if you paid in full with cash. So we thought about it for a few minutes and said, okay, let's go ahead and finance it. And we knew we were going to pay it off early, but we're like, well, instead of just dumping all of that money at once, we'll take the hit over a brief period of time. And we both have very good credit, 800 credit scores, and still couldn't get better than a 6% interest rate. They shopped around several different banks. It was a pre owned vehicle. That was the best that they could find. So we made, I think, two payments on it. And I was like, this is stupid. Why are we doing this? Let's just pay it off. And that's what we ended up doing. So we had a car payment, I think, for 2 months on that purchase. I was
and what year was this?
This was, I think, 2 years ago. So this would have been in 23.
Sure. Yeah, that makes sense. I mean, like car buying since post 2020 has just been a whole nother experience.
That's right. Yeah, and that's, I guess, part of the reason that we're seeing the increased car prices, but that doesn't tell the whole story.
Yeah, absolutely.
So I was going to mention that. Are you familiar with the Money Guy show?
I only from the conversations that we've had.
Okay. Well, I would recommend anybody check them out. So they're a couple of financial planners in Tennessee. I think they're somewhere around the Nashville area. They have really great content though, and they put out a ton of stuff every week, videos, podcasts, and everything is for free. They always say that if you want to become a client, it's typically they work with people that have multiple seven figures of net worth, and it's about preservation and achieving things that you might not be able to do on your own. So anyway, they have a lot of rules around different financial decisions, and one of them on car purchasing is what they call 20-3-8. And what that means is that they suggest that you put 20% down on a vehicle, you finance it for no more than 36 months or 3 years, and you ensure that the total monthly car payment is no more than 8% of your gross monthly income. So, an example would be that if you made $50,000 a year in gross income, divide that by 12 and multiply by 8%, you should be paying no more than $333 a month for your car payment. And this rule aims to help you purchase a reliable car while maintaining financial health, preventing excessive debt, and freeing up funds for other financial goals such as investing. So if we go back to our example from the beginning, I just did some math to try to figure out what that F2 250, that 2026 F250 that cost $102,000, what would that car payment look like if we applied all of those rules? So if we took that $102,000 total and we assumed that we put 20% down, which would be $20,400, and we financed it for 36 months, and we still assume that our interest rate is going to be around 6%, we would be looking at a monthly payment of $2,483 a month. And then to multiply that backwards and determine what your gross annual income needs to be to support that, if they followed this rule and they were working to have their car payment be no more than 8% of their gross monthly income, you would need an annual of $375,000.
Bump change. I mean, everybody that drives an F-250 clearly clears, 375K. I mean, especially right here in St. Louis, Missouri.
That's exactly right. That's exactly what I was thinking. I was like, I mean, I hate to pass judgment on every big truck that I see on the road, but that's exactly what my thought is at the whenever, I see these guys driving these trucks, I think I just don't feel like they're applying very sound financial practices, and they're overbuying, unfortunately. And we're in a consumer culture, but we're also in a keeping up with the Joneses culture. And especially where I live, I'm a little bit south of the St. Louis metropolitan area, where the trucks are everywhere. Like everybody has a great big full size truck. There is so much information out there about how the auto industry can kind of like get around the fuel efficiency regulations that were put in place with cars. And I see these guys and girls driving these trucks, and I'm just like, man, they're potentially in so much debt and probably going to roll that into the next truck or be paying on it for 8 years or whatever the case might be. But I mean, it's not uncommon for me to see these vehicles here where I know these people, some of the folks that live here, we didn't pay much more than ours for our homes. And now we're, potentially buying $100,000 trucks to sit in the driveway.
It's just hilarious. And I know we've talked about this in previous episodes of finding Fi through Mr. Money Mustache and just his way that he speaks about cars and trucks just in general. I forget the exact moniker that he uses, but it's like the superpowered lazy boy is just rings so true to me is the fact that we spend so much money for these things that in essence, it's just trying to get us from point A to point B. It's just incredible how much money, whether it's just advertising, keeping up with the Joneses, you bring up how many people in your area have trucks, but how many of those people are actually using the truck's actual function as opposed to a status symbol, etc. It's just very interesting.
That's a really good point. I see a lot of the folks in my area here that aren't hauling things. They're not hauling a boat or a camper or a trailer for the most part. And then they're not even putting anything in the bed of the truck. And it's typically a single adult that's driving back and forth to work. And maybe that makes them happy and that's what they want. For me, that wasn't the case. I own a truck, but it's a 13-year-old truck. It's small. It gets pretty good gas mileage. I bought it for like $12,000 pre-owned and paid it off within a few months. And that that strategy has worked for me in helping me achieve financial independence. So maybe some people, I mean, a lot of people, they just haven't really thought about it from this perspective before. And the auto industry and the finance companies are more than happy to take advantage of that. So let's talk about interest rates for a moment. You alluded to the auto industry. I guess a disclaimer here: we're by no means experts, and we're just having a discussion. But I remember prior to COVID, there were a lot of times where you could get 0% or 0.01% rates for cars. And since then, interest rates and everything else in the economy have shifted and changed. And like I mentioned earlier, the is kind of like the low. That's the best rate that you can get in a lot of cases when it comes to cars. So interest rates vary greatly depending on credit score. And that's according to Edmunds.com. Car interest rates or annual percentage rates, APRs, vary significantly based on credit score and whether the vehicle is new or used. For example, in Q1 of 2025, average new car APRs were 6.73% and average used car APRs were 11.87%. A higher credit score resulted in a lower APR. For October 2025, potential APRs can range from around 3.5% to over 20% for auto purchase loans. And that's just unsettling that there is potentially, like yourself, people out there getting taken advantage of that are paying potentially 20% on an auto loan.
I mean, it's just it's predatory at that point. Is that's all it is the same way that you have payday loan places and things of that nature. They they see an opportunity and they have no problem with taking that opportunity regardless of the cost to the consumer. So ultimately, I mean, lesson learned, I'll never do it again. So I mean, I guess that served its purpose in my case, but yeah, a lot of people aren't so lucky as I
Yeah.
was.
And we haven't talked about it too much yet, but a car is a depreciating asset. And I don't even really like to use the word asset when it comes to a car, automobile, but it's a source of significant expense. However, by making wise financial decisions regarding vehicle ownership, you can save and invest money to accelerate your journey toward financial independence. And I want to get into that last point more in a future episode where we talk about how I kind of like tongue in cheek, I'll kind of tease it here, but I thought a good title for a future episode would could be How My Truck Made Me a Millionaire or Helped Me Achieve Millionaire Status or Early Retirement, something along those lines. Because I have used it for side hustles and other streams of income. And we'll talk more about that at a later date. So maybe we can turn our attention here, Elliot, to smart spending strategies when it comes to purchasing a car. And I think it sounds like you and I have discovered most of these and perhaps made some mistakes around them over the years. Maybe we'll talk about the first one here. Choose a reliable pre-owned vehicle. How, if we go back to some of your automobiles that you purchased, some of the cars that you referenced that I had never even heard of, I wonder where they fall on the reliability scale.
Well, and it's funny because in the very our very first episode, if you made it through our highly scripted episode one, we alluded to a joke about me not being able to afford a car, and this was in reference to this Volkswagen Phaeton. Is I remember that I had something break on it. It was actually a it was part of the door lock mechanism on the rear passenger door, and ironically enough, this Volkswagen Phaeton that just seems very obscure is it's actually 80% the same components as a Bentley Continental. So it's super luxury car, and along with that comes the super luxury car repair cost. So I mean, I think the repair cost for this door lock mechanism was something on the order of like $1,200. And I remember having that come up, and I'm like, what the heck am I doing? Like, I don't want to spend $1,200 to fix a door lock. And that's actually what at the time I was just like, forget this. And I went back to the dealership. I sold back to him. I'm sure I took a massive loss. I've never even really considered how bad of a financial decision that was. I mean, I know it in my head, but I've never sat down and said, "Oh, yep, hey, I lost 30 grand on that transaction or whatever it was." But yeah, got something much more sensible
Yeah.
after that time.
And we've all learned or heard about the most reliable vehicles like Honda and Toyota, but I actually looked up yesterday what the most reliable or lowest cost to ownership automobile is. And do you happen to have a guess of what that might be?
Is it a
It is
Tesla?
a Tesla.
Yeah,
I was surprised.
that's kind of what I figured.
And you're a Tesla, you should be happy.
I am a Tesla owner, and I will say prior to us knowing anything about Elon, but however, yeah, it is a great product at the end of the day. Separating the person from the product is a very good one. The maintenance that I have had has basically been zero. Is I have had within the first, I think, 3 days, I had a maintenance issue on the passenger front seat on kind of like the lumbar support. They sent out a mechanic right away, fixed it in my driveway at zero cost to me. And the only other thing is I have had cracked windshields, but I don't know if there's something specific to the Tesla windshield or if I have just been a beneficiary of bad luck, with a long commute to work that just kind of comes with that. But luckily, my insurance, I've had either no cost or I've had one time I had to replace the full windshield and it only cost me $50. So all in, yeah, zero maintenance costs.
Yeah, that's definitely
You know,
not.
tires and fluids and brakes is really what they I think try and market their only true maintenance costs as.
Yep. And the windshield issue would not be a Tesla issue. That's probably due to our horrible roads in the St. Louis area that are constantly under construction. And Lori has had three different windshields replaced in her Subaru in the 2 years that we've owned it. And luckily, we did purchase the extended warranty on those, and it is more than paid for itself because it has the cameras and they have to be recalibrated every time the windshield is installed. But yeah, I think going back to the Tesla just for a moment, I like having a truck for the reasons that I mentioned earlier. I typically will haul things, and I'll get into that more in a later point. But if Tesla made a decent looking truck, I would be all in. But that Cybertruck is freaking hideous, and I can't stand it.
Yeah,
Why couldn't they just make their cars are very pleasing to the eye. They're nice. But that truck is hideous. And it doesn't even like fall in line with what their cars look like. A lot of times with manufacturers you can kind of see that hey, this truck kind of resembles this car and vice versa, but Tesla is like went the complete opposite direction and I would never purchase one of those.
yeah. No, I agree. The Cybertrucks are hideous.
So then a second point for smart spending strategies would be to buy with cash when possible. And we've talked about that one quite a bit here. If you can save up and purchase your vehicle with cash to avoid interest payments on your car loan, if financing, we talked about the rule earlier, the 23-8 rule from the Money Guys. This article that I'm referencing for some of these points here has a separate rule that's a little bit different where they're saying a 24-10 rule where you put down 20%, you finance for no more than 4 years, and you keep your total monthly transportation costs under 10% of your gross monthly income.
Sure. Let me interject here for a second. I would say, so you said like you and Lori just bought a car in 23, and obviously you've talked about your truck. How long of a period are you saving up cash to make your next purchase generally?
Yeah, that's a good question. And I would say that right now we have the cash and then I guess understanding that if something catastrophic happens, we would purchase a new, a new to me pre-owned truck for me in cash. And we just kind of have that money set aside as a buffer. In the past, we didn't necessarily have that same level of cash on hand. And that's why we used the strategy that we purchased and financed for a short period of time and paid it off aggressively over a couple months. So I I mean right now we're not actively pursuing saving money for that next purchase. Hopefully, ideally, knock on wood, nothing happens to either of our vehicles. I My strategy, this I think is a future point, is to drive them as long as I possibly can. Each of the cars that I've purchased over the last several years, I my goal has been to get them to 300,000 miles. I was unsuccessful with Lori's last car. I will take some of the blame for that. It was a Mitsubishi Outlander we purchased with like 14,000 miles on it, and we owned it for several years. It was a really good car. She took great care of it on washing it and keeping it clean, and I did most of the maintenance. But the one thing that I overlooked was that it had a CVT, continuously variable transmission, and it was one of the earlier models of CVT where they weren't as reliable. But it died on us at 180,000 miles, and I thought maybe we can get a new transmission, and the transmissions cost like $8,000, and the car was not even worth $8,000. And then as I got into doing some research, I discovered that I probably should have been changing the transmission fluid more frequently because there's a lot more moving parts inside of a CVT than a traditional transmission. So that's something that I have definitely done with our Subaru, where she just turned 50,000 miles and we've already got the transmission fluid changed. So hopefully this one will last us. My truck has 180,000 miles on it, and I would really like to get it to 300,000 miles. We'll see how that goes. Things are starting to fail on it, and I talked about in recent episodes where I'm in the process of getting the radiator changed. So I just got that part ordered and hope to fix that next week. And hopefully that does not turn into a just a every other month kind of thing where I'm fixing something, because at some point we will have to make the decision to purchase a different vehicle for me.
Yeah. Yeah, I mean, I guess the biggest thing for me, and I'm just trying to, of course, get my own answers, is especially you being retired, and then hopefully at some point Lori following you, is how much of that do you take from, just general savings of saying, hey, this is an emergency fund, or this is just all of our money that we have either in a taxable account or something else, is how much of that you are actually quote unquote setting aside, saving, saying, oh, hey, from this time on, I'm saving, for another eventual purchase in 15 years. And let's say I think I need $30,000, 30 divided by, you know, and just extract it out to basically making a car payment, but you're paying a car payment obviously to yourself.
Yeah, that's a really good question. And I probably haven't fully explored that strategy for the next time around. This time, or not this time, but the next vehicle that we will have to purchase, I fully believe that it'll be in the price range of, let's say, $20,000, $20 to $25,000, and that'll be approximately, at this point in time, 50% of our cash. So not too worried about that. We sit on a little extra cash because of rental properties and just, I guess, peace of mind. And if we had to do that tomorrow and had to part with that cash, then I would probably look to rebuild that back up to that level that we're comfortable with over the next year or so. It might take a little bit longer than that, but I think that's what we would be looking at. And then from there, ideally, we would have that vehicle for at least 10 years, if not longer. And Lori's car is just 5 years old at this point, so hopefully we'll have that one for another 5 plus years at least. And who knows what the price of cars will be whenever we're talking about this in a year or whatever year it'll be, but of our strategy that we're working with right now.
Right. We'll be full on Jetsons at that time, right?
Yes, won't need our cars to be on the road.
Precisely. Well, I think we just even talked about the last point in a fair amount of depth as well, is just driving our affordable cars for a long time. Is, like you said, trying to drive them into the 200s, 300,000 mile range if you're so lucky. And of course, taking the proper maintenance and care of your vehicle to really get that full lifespan that you're looking for.
Yep. Switching our attention real briefly, we won't go through too many of these bullet points in detail, but leveraging your car for income, I thought was an interesting on your car being a depreciating asset. So using it for ride sharing or food delivery, I don't have any experience with either one of those. One of my sons has done some of the food delivery stuff, and of course Uber and Lyft are very popular. But I mean, I feel like to an extent that is a lot of short, brief drives that are probably putting more wear and tear on your vehicle than it might be worth. That's just my own personal opinion. Renting out your car. This is an interesting one that I've heard about in the past and have considered exploring where you just put your car up on Turo or Get Around. And so in my case, having a small truck, maybe somebody needs to rent it for a day or a weekend to move, whatever the case might be, or haul something. I haven't explored that, but I think that could be a worthwhile option. The next one for me is probably where I have leaned in more. So starting a this as a mobile business, but for me starting a small business. And so a few years ago I was really heavy into woodworking and I was building a lot of things. And the truck came in really handy because I was hauling lumber, I was hauling finished product and delivering it to customers all the time. But prior to that, we started investing in real estate back in 2016. And when we had our first house, we bought our first property, we were doing all the rehab work. I had a car. I had a little, let's see, it was a Ford ZX2 coupe, two-door little car that I think I bought for a few $100s. And I was hauling around my tools and trying to haul materials and everything else in it, folding the seats down, and it was very impractical. So that's whenever I bought my truck. And it's the third small truck that I've owned over the course of my driving life. And I don't think I would go back to a car at this point. Having rental properties and always needing to haul tools and supplies, it's just the truck is just very valuable for that. And I would say that if I had to estimate, there's probably something being hauled or in the bed of my truck probably 50% of the time. So for that reason, it has been very helpful in helping me grow my rental property business and also the woodworking business in the past. Any thoughts on any of those
Yeah,
so
no, I
far?
mean, yeah, no, I mean, it makes perfect sense, that as a counterpoint to what we have been saying about, I would say a traditional truck owner is you're giving all these examples of how it has allowed you to not only use its function but actually generate income. And so then the cost benefit analysis of actually having a truck makes much more sense as opposed to, hey, I'm driving to and from work on paved roads every single day. I'm not going off road. I'm not using my 4x4. I'm not doing anything that requires a truck. It, like, I know Mr. Money Mustache talked about the superpower of even like minivans in that example of, hauling drywall or things like that. And with us having a van, I've done this, not not drywall, but I've hauled lumber in the van, and just the ability to be able to fold down the back seats. I mean, there is a lot of area to actually carry things. So while we don't have a truck, we've picked up bulky things like things from the Buy Nothing group that we talked about the other day. And so we've had that function out of a different type of vehicle than just a truck.
Yeah, that's true about minivans, and I've heard other people echo a similar. And I was with you whenever we hauled the PVC pipes, and I couldn't believe that you could fit those 8 foot sticks of what was it 6 inch PVC in your minivan, and you were just loading it all up, closing the back door, and I was like, wow, that is incredible. That you don't looking at it from the outside, it doesn't look like it would haul all that much stuff, but it certainly does.
Yeah, no, it is. I remember seeing a photo that I think Pete had on his blog, and it was like having, I don't know, probably 20 sheets of drywall or plywood in the minivan. I was like, man, really, really puts it to the
Yeah.
test. Is shows you, don't judge a book by its cover in some regards, right?
Yep. for sure. So maybe as we're kind of starting to wrap up here, good point to end this part of the session with is shifting mindsets for financial freedom. Financial freedom and financial independence is about making intentional choices that align with your long-term goals. The car you drive is a key factor in this journey, and making smart, often countercultural decisions can put you on a fast track to financial freedom. I really like these points a lot because I felt like it's to me it's all about what we've talked about in this episode is just being intentional, kind of going into it eyes wide open, understanding that it is a depreciating asset, understanding that there is a cost to car ownership than just the monthly amount that you pay for financing. There's also the higher insurance cost because you're now paying for full coverage. There is cost that you're giving up when you could be investing that money instead of spending it on that depreciating asset. And ultimately, it's your financial independence that you are giving up because instead of potentially having the flexibility to less or to work a shorter period of time in the long run, you are paying for that car that you're excessively for that car that you are driving back and forth to work and back and forth to point A to point B.
Yeah, 100%. You know, when I look at my own kind of car art going from, this I used to call the 1988 Saab, and it was just a gray car, and Saabs look very
Yeah.
boxy, so I just called it the Tank. That's what it was. And so going from the Tank to the Phaeton, probably at the height of, you know, just throwing caution to the wind. And then at one point, I was driving. I think I talked about this on one of our episodes. Was a little Hyundai Accent that my coworker at the time called the roller skate. You know, and now, of course, once again, I'm driving a Tesla Model 3, so sure, maybe I'm back closer to the Phaeton than I am to the roller skate or to the Tank. But like you said, very reliable car, and given the fact that I have such a distance to work, just made sense for me at the time. So
Yep. So you want to get into a couple rapid fire questions for fun?
yeah, absolutely.
I got one for you.
So
I'm curious to get
go for it.
your answer on this one. So, one car rule that you live by now.
So I would say make sure that it is function over form more than anything else, is just making sure that you are buying this not for keeping up with the Joneses, not for vanity's sake, not just because, hey, you know, any other reason beyond, hey, it gets me and the people that I have to drive with from point A to point B. Man, cannot talk. I would say that's probably the biggest rule, is just making sure that it's meeting the vision for the car. How about you?
Yeah, I think you had a really good answer there. First thing that came to my mind was no. That's kind of the rule that I would live by now, having paid a tremendous amount of money over the years in financing. Could not imagine other than the short-term strategic couple month or so loan that we talked about that we've done in recent years. I would just try at all costs to avoid debt.
Yeah, I would 100% agree with that. It's like I I didn't even say it because in my mind that's not even an option anymore. Is debt is just so insidious in all forms of life that, with the exception of really a house, taking on debt just doesn't isn't even hardly an option in my brain anymore. So, being a car guy, I got one for you. Dream car, if money didn't matter, what would you pick? And I know the question was, but fire mindset still applied. I don't even care about the fire mindset. You're a car guy. What's your dream car?
Oh man, this is a really hard one. I would have always said a Lamborghini Countach, but nowadays it's so impractical to get in and out of. They sit like 4 inches off the ground. So, but I still really appreciate the supercars. and I saw a McLaren up close earlier this year. I man, those are beautiful cars. And so I if money didn't matter and yeah, I'd probably it's as an impractical as they are, I would probably go with some kind of supercar like that. How about you?
Yeah, I don't have a specific model by any means, but it would be some sort of supercar. I mean, I as more of a daily driver, I always really liked the Audi R8s. I think they look super cool. But as far as a true like dream car, I mean, whether that's Ferrari, Lamborghini, I mean, just the driving a Bugatti Veyron. You know, I've seen a McLaren twice in person, both times when we've been in Europe before. Like literally, I could touch it. I've taken pictures next to it. Yeah, they're super cool.
Yep.
And maybe the last one is one word that sums up your car philosophy today.
I would have to say, I guess practical. Maybe intentional is a better word, but and let's go with that, intentional, because I think that I shouldn't have to explain it because it's supposed to be a one word answer, but just being intentional with the purchase, making sure that it's the right fit for, like you said with the earlier question, the right fit for your needs and your family, and that it is going to be, and yeah, you're not going to be going into debt on it. So intentional. How about you?
Yeah, I mean, I feel like such a cop out when we answered these right after each other because I'm like, man, that's a really good one. No, I would have said, yeah, functional, but intentional is a better word than functional in that nature is, you know, I think we're both getting to the point of, you know, it's no longer like you're having to say, I'm buying this car for super cheap just to, you know, kick the proverbial can down the street and face that problem when it comes is, you know, whether it's a car that is more fun, that does cost a little bit more, as long as you're going in and making that decision intentionally, I think that's what's most important is go back to our buddy Carl from Mr. 1500 would just be like I know that he used to talk about his love for the Acura NSX and how he thought it was this dream car that he wanted and I won't spoil all the fun that goes along with it, but long story short, you know, he owned one and then realized, hey, like nice, but you know, this isn't what I'm going to just have forever. And it was more about the community that was around the car than necessarily the car itself. So I think as long as you're going in and making those decisions intentionally, you know, more power to you. If the one thing that I would want the audience to take away is, and I think this is something that people earlier in their FI journey may think when they stumble upon different resources is to say, well, you can't have a nice car or an expensive car if you subscribe to the FI mindset. And I would hope that if you've listened to enough of our episodes already, is that's not what we subscribe to. Is as long as you're making a choice that makes sense to you and your family, if you have one, is you know, to steal Paula Pants line, you can't afford everything, but you can afford anything, right? So
I agree. Well said. Well, are we ready to close it out here, Elliot?
I think so. So
Take it
I
away.
would just echo the
Sorry. Take it away.
so I would just uh,
We need a blooper reel.
all
All
good. Yeah, right.
right. All right. Take it
So
away.
I just echo this.
I think you
Oh
were looking at me when
man,
I was going three,
that's a
two, one. All right. Take it away, Elliot.
very good. I would just echo the sentiments that Josh left us with earlier in the episode is if you've enjoyed this episode, this is the first of a three-part series. I hope that you'll follow along with us. And if you enjoyed what you've listened to today, give us a like or subscribe on YouTube or podcast player of your choice. Give us any feedback, good, bad, indifferent, whatever. We appreciate it. I know that we've had a little bit of feedback on some audio quality issues, so Josh and I on the back end are working on fixing those, and hopefully we'll get some episodes redeployed to fix our static issue. But really enjoyed the episode today. And Josh, do you have anything else to leave the listeners with?
Nope, it was a fun conversation. Looking forward to the next one.
All right. Thanks.
Yep, thanks,
Talk
Elliot.
to you soon.
See ya.
Bye.